Ken Jolliffe with BIS Commodities here in Cedar Rapids, Iowa. Going to look over the grain trade here for the week of November 5th. A couple of things very important this week that we finally have behind us. One, the national election is done. I'm sure we'll all be satisfied not to have flyers in our mailboxes and our telephones ringing every night when we go home. The other one is the USDA November crop report, and we'll go through some of those numbers here in the next couple of minutes. That came out this morning at 7:30. Taking a look at the corn number, not a lot of changes in the overall corn numbers from top to bottom. They increased the yield slightly from a 122 yield to a 122.3. It added about 19 million bushels of corn to the production number, which finished at 10,725 million. This was, like I say, up 19 million from last month. The bean number, as expected, we were looking for a larger bean number because of the yields that we were hearing here this fall. They put the bean yield at a 39.3 nationally. That's up from 38.2, so it was an increase of about 111 million bushels of beans in the November report. Looking at the demand side of things, and we'll touch base with here with the corn first as we go down through the usage numbers. And I say not a lot of change in those when you look at the feed number, the ethanol number, and the export number. Actually, if there was a surprise in it, it was the export number not being changed. A lot of the trade thought maybe we'd see that reduced anywhere from 50 to 100 million bushels. And at this particular time, they decided not to. So the carryout number came in at 647 million, up about 28 million from last month's 619. When you look at some of the breakdown of the corn as we move forward from this point after seeing these numbers, we are seeing the export side. We are slowly becoming a little more competitive in the world as far as values out of the Gulf or values out of the PNW. Part of the reason for this is as the supplies tighten up in Brazil, those premiums are going up and starting to match our premiums that we are seeing here coming out of our Gulf here right now. So as we move forward there, we could slowly see our export business in the corn pick up, probably more in the January, February, March time frame. Because we are seeing some interest from countries like Japan now that, they're maybe coming into our market for the corn. One, because the competition, two, because, the program in Brazil is booked. In some cases, the waiting to get loaded is lengthy, and they'll come into the PNW or the Gulf in the United States to load some corn. So a positive there, but a very, very minor probably positive at this particular time. Now, taking a look at the bean number, as we said, they raised the overall production up about 111 million bushels over last month, a little bit more than what the trade was expecting. On the demand side of things, though, we did see them raise up the demand by about 100 million bushels. So when we came down to the bottom line, last month they were showing a carryout of beans of 130 million bushels. This month it came in at 140 million bushels. Now, we did see a negative reaction to the trade here late in the week, particularly today being down 40 to 45 cents. We're down about 75 cents for the week. Even though the carryout number was only raised 10 million bushels, I think what we finally got to a point where, the overall supply, we know what it is. The demand side of the issue here with the soybeans is probably a lot truer picture than what it has been going through the drought of this summer. We've got some of the crush numbers, the export numbers, back up to levels that many of us thought we were probably going to be at. But as the balance sheet comes through the July and August time frame, we always have to play with bottom line numbers. So a lot truer picture. Even though the 140 million bushels is still tight when you look at a stocks-to-use ratio that is just a shade under 5%. We saw the reaction today of the bean market going down. Part of that reaction not only was this report, but the other part of the reaction was we look at the technical side of things here right now, and the soybean market's got a very negative chart formation going on. We brought it down to fill some gaps from earlier this summer. We also brought it down to a level where we got the 200-day moving average. So, the other side of things is we talked about the election and what the future looks like here in the next 6 weeks with the so-called fiscal cliff coming. We continue to see a lot of our fund managers, head managers, that have been pulling money out of our commodity trade, whether it's our corn, beans, and our wheat, or you look over into the energy sector, or even the soft sector of sugar and coffee. A lot of this money's come out and put on the sidelines. The question is, will these managers put this money back to work? What will spur them to put this thing back to work? And part of it's probably some type of settlement within the Congress as far as what happens after the first of the year. The other thing, naturally, as we move forward now, we got to realize that the South American crop is being planted. It in the time frame that we're looking at right now is our May down there. So the crop is going on in. There's been some issues as far as being too wet in the far south, possibly a little too dry in the far north. Some of the weather forecasts this week did moderate that some to where they did dry out in the south. And they are getting something done, so that's going to be something to to watch here for the next 2 to 3 weeks to see how they come along with their planting. To see if there's a possibility that if they are too wet in the far south in Brazil, Argentina, that maybe they have to come back and switch out of some corn into some additional bean acres. So we'll continue to keep updated on that. And of course, as we move forward, when we look at the comparison of their time frame to where we were, say, back in mid-May of this spring and early summer, you always kind of plan on the big acres, the big crop, and plug all those into your numbers right now. So there's probably very, very little weather premium in the bean market at this particular time. Probably doesn't need to be much weather premium in the bean market right now, until we get maybe a latter part of this month into to December and see how the planting conditions go, see if the patterns of the weather changes, and go from that point. The Chinese have been very busy in our market. Now our export sales were very low this week, but there's been a lot of Chinese pricing going on here yet. One would surely think that we'll see some additional sales to China next week, moving forward. Other than that, when you look at the report today, I think we need to remember, this is the final crop number that we're going to see until January. So we're going to go through a time frame here to where we're going to lack some of this fundamental news to talk about. And as I want to stipulate, we do know the supply now, so we will watch the weekly export sales to see if the customers come in here and continue to start buying up beans, see if they come back in here and start showing some interest in our corn market if we can narrow up the gap in the world. One thing we need to remember too, as we look at numbers, we will have another supply and demand report in December. Typically that report's not changed, doesn't show much change. I don't suspect we'll see much change this year. But we'll need to just kind of monitor the wheat conditions right now, both in the southwest part of this country and the wheat conditions and the export pace coming out of the Black Sea. As the wheat supply has tightened, we are continuing to see the European community needing wheat. The European community is also probably needed some feed grains, so we will monitor that particular demand area there. But we're going to come into a time frame here now to where things get fairly quiet, probably fairly flat type market to watch. If you look at the corn market for the past 6 weeks, it's been in a trading range between basically 730 and 770. One would suspect that we're going to continue to be in that particular range. Bean range, I think we'll have to see if the technical picture holds here next week. A lot in the trade, look at it that we still have, $14.50 to maybe a $16 trading range in beans, but that'll come down to the weather in Brazil at this particular time. So If you got any questions, give us a call in Cedar Rapids. Our phone number is 800-373-2525. Go to your computer at biscommodities.com and look us up. Thank you.